Welcome to the Professional Investor Podcast, brought to you by Fundamental Asset Management. I'm your host, Jonathan Bramall. Today's episode was recorded the morning after Budget 2025, and we're diving straight into what it all means for investors. I'm joined by Chris Boxall, co-founder of Fundamental Asset Management and a seasoned expert with a sharp focus on both AIM-listed companies and the main market. Chris shares his insights on the key takeaways from the Chancellor's announcements and what they mean for UK equities and where the opportunities and risks might lie for investors like you. Thanks for joining us, Chris.
Hi, morning.
Good
Post-budget
morning,
chat
post-budget.
should be
Yeah,
interesting.
absolutely. And what were your highlights, I suppose, for want of or lowlights for that matter, from the budget yesterday, Budget 2025?
Well, given all the leaking before and the fact it was leaked just on the cusp of her delivery by the
Yeah.
OBR, it was a bit of a non-event, wasn't it, in the end? I mean, we were pre-warned about a lot of things. The general comment is right. It's out of the way now. Great.
Mm.
There's been so much conjecture and discussion around this, and fear and worry, and markets hate uncertainty. So at least it's out of the way. We know where we are for the time being. I assume they're not going to rein back on anything because they'd already tested the water beforehand. So yeah, look, the good news is it's out of the way. So hopefully that could be good for stock markets. And actually, the UK stock markets, the main markets, perform really well this year. So yeah, onwards and upwards. Hopefully that will start translating into for smaller quoted companies as well.
And in terms of the budget and the hope that it sort of turbocharges, or at least let's face it, charges the economy and smaller companies included. What policies, if any, do you think will help the economy and of course the companies to grow?
I think look, there were really relatively modest initiatives to support real growth. I mean, you need big sums of money addressing that, and here we've got little sort of efforts, small sort of piecemeal efforts. I mean, clearly from UK investors, we're trying to be encouraged to invest in stocks and shares. I mean, so they're restricting the amount that can be put into a cash ISA to only 12K a year. So stocks and shares ISA still 20. That's hopefully going to be beneficial. I mean, she brought up this example, didn't she? I mean, you can probably you've got this statement she made about the benefits of investing in a stocks and shares ISA and over above a cash ISA. What did she say about that? She
Yeah,
actually quoted
investing.
this in the
Yeah,
budget
the
speech.
quote was, and it was in the budget that speech that was released at the same time. Investing £1,000 a year in an average stocks and shares ISA every year since 1999 would have delivered a £50,000 better return than if it was invested in a cash ISA.
Yeah, see that was interesting. I thought I'd go in to check these numbers. So I plugged them
Very good.
into my one of my friends now, Gemini, Google Gemini. I recommend anybody to have a look at Gemini 3, just a release.
Oh, very good.
Google, owned by Alphabet, which is a stock that we've been investing in for a long time across our general portfolios, I hasten to add.
Very good.
And yeah, so I looked at this. So I put the numbers in, and it's interesting the returns. So yes, if that stocks and shares ISA had been invested in UK all companies, you'd have been, by our reckoning, about £30,000 better off. Not the 50 than if you'd invested in an average cash ISA. If it had invested in a global stocks and shares, so an ISA that invested in companies broadly spread across the world, you'd have been about £60,000 better off. However, if it had only been invested in North America stocks and shares ISA, you'd be about £90,000 better off. So
Wow.
it just shows it all depends where you'd have committed your money to. And it highlights really the benefits of being very open-minded with investing and spreading your net wide, being free to invest around the world. Where you see the best opportunities, and clearly North America has just been delivered stunning performance over that period.
And so you mentioned in in your main market general investment offering that you've been long-term investors in Alphabet, owners of Google. So you have therefore some form of is that North America only holdings, or how is the sort of makeup of that investment?
No, we've been running a global growth model for some time now, and we've invested. We've always been fairly open-minded in our investing. So our general accounts, outside of AIM related stuff, outside of tax related planning accounts, have invested widely in overseas markets, and we've had decent exposure to North America. We've held Nvidia, we've held Microsoft, Alphabet, and we've held less well-known companies like Garmin as well, the maker of the smartwatches, which a lot of people are familiar with. That's been a
Yeah.
very good investment. But yeah, we've liked Alphabet for a while. It's an easy business to understand, as is Microsoft and even Garmin. These are companies that we come into contact with. Most people come into contact with every day, so they're relatively simple. And we've never thought you should be, wedded to the UK market. So from that perspective, I think it's a good thing that this British ISA concept hasn't been pushed. I mean,
Mm.
that seems terribly artificial to me. And look, you can see that the sort of controversy it would have generated, given the massive outperformance of overseas markets relative to the UK over the last 27 years.
Yeah,
I mean, it's
sure.
been a no-brainer to invest widely.
And tell me, for those that are feeling that either the UK is where growth is going to happen over the next 27 years, let's say, or those who are just feeling that it's their patriotic bit to put their money in UK only stocks and shares, do you offer a way that people can do that if they so wish?
Yes, I mean we can run bespoke portfolios, so they only want UK exposure, and our high income portfolio model actually only holds UK stocks, and that's focused on dividend income. The yield's over 5%, so it's quite an attractive income generator. But because of the different tax consequences for holding a US or overseas stocks, and of course the foreign exchange elements to that. Our inc For those income investors, and we run an AIM income model as well, but for general investment, yeah, our income model is only UK based. But for those wanting, overall growth, we'd urge them, as I say, to be open-minded and look to invest wherever they think there is opportunity, and that isn't necessarily in the United Kingdom. It could be anywhere.
Excellent, thank you. And in terms of AIM, uh, were there any particular highlights or lowlights of the budget yesterday?
Well, we had the big whack in the 2024
Mm.
budget, and investors in AIM are still getting 50 from April 2026, still picking up 50% IHT relief. So that's quite attractive, particularly for larger states. And also AIM shares, you've got the liquidity. If you want to get out of them, you can. You're not trapped at all. And they are subject to a proper market. This isn't a closed shop where you're dependent on buyers coming in if you want to exit. So AIM is a real open market and liquid. And of course, the real advantage as well is the ability to have an AIM ISA. So if you've invested in an ISA for a long time and you want to keep in and continue to benefit from the tax relief through an ISA, tax benefits of an ISA, you can transfer that to an AIM ISA, and you still, there are no tax consequences. So that's continues to be really beneficial for AIM. I think AIM's had a tough period. I think many people were fearing that it could be hit again during this budget. That wasn't the case. That's seemingly off the table. So let's hope it now has a better run, because there's fabulous value on AIM at the moment. It's staggering value. That's illustrated by the number of share buybacks going on. So many companies are deciding that, well, if they got excess cash, the best way to put it is just to buy back their own shares because they're so cheap. And yeah, so I think hopefully that will give AIM a little bit of relief, and we might see some more positive moves. There's also going to be a stamp duty holiday for new listings. That was one of the
Mm.
initiatives from the budget. So new companies coming onto AIM won't have to pay stamp duty. That may encourage others to list, which is good news.
And that seems to be welcome based on the fact that the UK, both in terms of AIM, but generally there's been a feeling that the main stock exchange as well has been struggling to encourage new listings. So I suppose this is the government trying trying to do something to start to change that, which seems like a
Yeah,
positive move.
the cost of listing is very, very high, so
Mm,
anything could help it. I think if you're an entrepreneur looking to list and you've been told, well, it's going to cost me millions of pounds to list my company, you think, well, wow, why do I want to spend that much?
mm,
Private equity comes along and offers me a deal, or an overseas stock exchange, notably the US, is cheaper. Well, I'm going to go for that, especially as I might get a better rating for my stock. So, yeah, anything I think to help encourage new listings is beneficial, as long as they're the right type of companies. The last thing you want is the sort of rubbish that has been mooted, like low-priced online retailers trading from certain more questionable overseas domiciles and
right.
with questionable accounting and reporting. That's the last thing we want. We want
Yeah.
proper businesses, proper growth companies that are, delivering benefits hopefully to society. And I question that certain companies that were thinking of listing on the UK, in which the London stock market was really trying to encourage, weren't going to add much value or credibility, particularly to the UK stock market.
Interesting. And in terms of the budget, some of the things that maybe people missed, there was a mention of some changes to VCT and EIS yesterday. I don't know if you can
Yeah, I
delve
think
into
that's
that a little
quite
bit.
important. I think probably a bit too much is made of it, but I mean, EIS is still a bit of a pinprick in the general investing scheme, so this isn't a massive growth initiative. However, they have maintained the income tax relief for EIS investments at 30%. So if you invest in an EIS, an enterprise investment scheme company raising new money, you get 30% income tax relief. If it's not on the stock market, it benefits from the £1 million IHT allowance as well, which is beneficial. And also, they are lifting the limits. So these small companies can now raise more. They can raise 10 million a year. Knowledge intensive companies can raise even more, and they can have higher numbers of people and greater assets than they had previously. So this means it's encouraging almost, slightly larger companies to still benefit from the tax reliefs, which is good. Larger companies, better established ones, are conceivably less risky, even though they're new raising this EIS money. So that's good news. On the other hand, it's bad news for VCT investors because the income tax relief for those is dropping from 30% to 20%. And I would say that will make a lot of people think twice about VCTs, venture capital trusts, which are also very risky. And if you look at the real returns they've generated, over the years, they haven't been great. I mean, they're very expensive as well.
Mm.
They've got a lot of costs, many of them hidden really from investors. And if the income tax relief's dropping to only 20%, some may think twice about that. Obviously, there are no inheritance tax planning benefits either for them. So that's an interesting move. So good for pure EIS investments. That's direct investment into EIS companies, albeit via a sort of collective quasi fund scheme. But bad news for VCTs, given the reduction of the relief.
Thanks, Chris. And so overall, then the budget, obviously, as you said, a lot of the information was briefed and then, of course, famously leaked before Rachel Reeves ever stood up. But it generally, from your perspective, there were some promising policies announced that one hopes is going to help to grow the economy generally, but also the space which you specialize in as well. AIM companies hopefully will be helped by yesterday rather than hindered.
I think so. I think generally, but in the conclusion, there are no big growth hits. That's the
Mm,
disappointing thing. These are all relatively small. I mean, EIS reliefs, these are the grand scheme of investing. For example, compared with infrastructure and energy and things, this is really diddly squat. And but at least it was better than nothing, shall we say?
yeah, sure. And it wasn't alluded to yesterday, but in terms of the the previous Chancellor announcing the Mansion House Compact a number of years ago now, but which Rachel Reeves as Shadow Chancellor, always said she supported. Is there any sign of that slowly dripping into the AIM market at this stage, or have you
Oh,
heard any more on that?
we haven't seen it yet. I mean, it wasn't mentioned. It's clearly still on the table, and she's discussing with apparently, well, her department is discussing various advisors, but we haven't seen much happening yet. But it seems that it's still going to happen. It's just
Yes.
when, and all
When?
these things
Mm,
seem to take a long time.
yeah.
And in the meantime, markets sort of meander, and there are better ways, better places for people to put their money. And the
Yeah.
companies themselves, stock market listed companies, need to do more to help themselves. They can't just rely on outside help. They need to, sell their story in a good way, in a responsible way to prospective investors. And many of them don't really do that very well. So if that could improve, I think that would be very helpful.
A little bit more sizzle would help. Would
Yeah,
help.
yeah, a little bit more razzmatazz, a little bit
Mm,
more almost Americanism to it.
yeah.
Sell your story. But if you've got a good story, as long as it's credible,
Yeah.
you don't want to tell fibs. And I mean, our big bugbear as well, the reporting. Just to finish with this, the reporting of small caps and the financial reporting and the amount of adjusting you can seeing now is just ludicrous. And compare it, I'll leave you with this, compare it to one company here, notably Alphabet. I mean, you look at their numbers, they're clean as a whistle. You don't see any adjustments. They even didn't adjust for a several billion-pound dollar, sorry, European fine. And they even sort of half-heartedly told you about that in their last
Mm.
reporting, I noticed. So you compare that to some of the rubbish you have to read among UK stocks, and especially smaller quoted companies, where they just adjust things to smithereens. So I'd like to see that improve. I really would, and I think it'll be helpful. I think investors would view them with less skepticism as well.
Absolutely. Yeah, yeah, yeah. So, well, thank you very much for your time and for giving us your insight, and indeed for um digging a bit deeper into one of the statements within the budget about the advantages of stocks and shares ISA, which obviously we all
Yeah,
think
that
is
could be
a
good news.
positive, but it's a
Yeah.
good news. But interesting the to not get too fixated on one geographical location, I guess, which is an interesting point. So thank you very much for that, Chris.
Okay, no, good stuff. Hopefully,
Excellent.
good returns to we'll see some positive returns from this over the coming months.
Absolutely. Thanks very much for your time. Take care.
Okay, bye.
Bye. That's all for today's episode of the Professional Investor Podcast, brought to you by Fundamental Asset Management. A big thank you to Chris Boxall for sharing his insights on Budget 2025 and what it means for investors navigating AIM and main markets. For more information, expert commentary, and investment insights, visit us at fundamentalassets.com or follow us on LinkedIn. Thanks for listening.